In this lecture, we are going to learn different types of project appraisal method. That means different types of discounted methods of project appraisal and undiscounted measures of project appraisal. So in today's lecture, we focuses mainly on undiscounted measures of project appraisal. Okay. So first of all, we study different types of project appraisal methods. So there are major two types of project appraisal methods. In that, first one is undiscounted measures and second one is discounted measures of project appraisal. Okay. So in case of undiscounted methods of project appraisal, time value of money is not considered while calculation of project. Okay. Whereas in case of discounted measures of project appraisal, time value of money is considered while calculation. Okay. So under undiscounted measures of project appraisal, there are major 5 methods. In that, first one is ranking by inspection, payback period, proceed per unit of outlay, average annual proceed per rupee of outlay, and average income on book value of investment. These are the different methods of undiscounted measures of project appraisal. Under discounted measures of project appraisal, in that first one, that is NPW or NPV, that is net present value, then IRR, internal rate of return, then BCR, benefit cost ratio, and last one, that is PI, profitability index. Okay. So first of all, we study in detail about project appraisal methods, that is undiscounted measures of project appraisal. Okay. So these undiscounted measures of project appraisal, it is nothing but the choosing among the alternatives of the project. That means in this method of project appraisal, time value of money is not considered while calculation of project cost and benefit. Okay. Sometimes this undiscounted measures is misleading in ranking, hence the choice go wrong. That means there is sometimes chance to wrong selection of project under this undiscounted measure of project appraisal. Okay. So this is the undiscounted measures of project appraisal. That means in this method, time value of money is not considered while calculation of cost and return of that particular project, and this method is just choosing among the alternative project. Okay. So under undiscounted measures of project appraisal, there are major 5 methods. In that, first one, that is ranking by inspection, proceed per rupee of payback period, proceed per rupee of outlay, average income on book value, and average annual proceed per rupee of outlay. These are the different methods under undiscounted measures of project appraisal. We see one by one these different methods in detail. Okay. So first method, that is ranking by inspection. Okay. Ranking by inspection, that means its name indicate its meaning, just give the rank on the basis of inspection of that particular project. Okay. So this ranking by inspection method is basically based on size of cost and length of cash flow stream. Okay. So basis of this method is size of cost and length of cash flow stream. That means suppose there are 2 projects having same initial investment and same net value of production, but with difference in length of period. Then project with longer duration is preferred that of a shorter duration. That means in this ranking by inspection, the project having longer duration, that project will be selected for further implementation. Okay. This is the first method, that is ranking by inspection. Okay. For example, suppose project A and project B are the 2 projects and having same investment and same net value of production. Okay. But with different length of period. Then project A having life period of 5 years while project B having the length of time of 3 years. Then which will be the selected for further implementation? Okay, so project A will be selected for further implementation because the life or length of period of project A will be 5 years, which is greater than project B. So project A will be selected for further implementation. This is the ranking by inspection method. Okay, so in this method project will be selected on the basis of longer length of period. Okay, then second method, that is payback period. Okay, so definition of payback period, it is the length of time required to get back initial investment on project, that is called as payback period. Okay, that means how much time required to get back our initial investment in particular project. That length of time is nothing but the payback period. And this payback period, it is the common and rough means of choosing among the investment in the business enterprise. Okay, then under this payback period, the preference of project should be based on lesser payback period. That means project having lesser payback period, that project will be selected for further implementation. Okay, so for calculation of payback period, formula is P is equal to I upon E, where P is equal to payback period, I is equal to initial investment on the project, and E is equal to annual net cash return. Okay, by using this formula we can calculate payback period. Okay, for example, suppose the two project A and project B having initial investment of 20,000 rupees and get following cash flows. So project A get net cash flow of rupees 5,000 in each year, while project B getting net cash flow of rupees 4,000 per year. Okay, so payback period can be calculated by using formula P is equal to I upon A, where I is equal to initial investment, it is of 20,000. Then E is equal to net cash return, that is 5,000 for project A. So payback period for project A will be 4 years, while in case of project B, initial investment is 20,000 rupees and annual net cash revenue is 4,000 rupees per year. Okay, so payback period for project B is 5 years. Okay, so which one project will be selected for further implementation? Okay, so which one project will be selected for further implementation? Yes, project A will be selected for further implementation because project A having payback period of 4th year. That means within a 4 year, this project A will cover this initial investment of 20,000 rupees. Okay, while in case of project B, it requires 5 years to cover this 20,000 rupees. Okay, that means within a short period, that means less than 1 year, this project A will be covered its initial investment. So project A will be selected for further implementation. This is the payback period. Okay, third method, that is proceed per rupee of outlay. So under this method, the magnitude is calculated by dividing total proceed with the total amount of investment. Okay, so total income divided by total amount of investment, we get proceed per rupee of outlay. And selection of project was done on the basis of highest magnitude of this parameter. That means the project which having highest magnitude of this ratio, that project will be selected for further implementation. This is the method, that is proceed per rupee of outlay. After this method, next one, that is average annual proceed per rupee of outlay. So in this method, this calculation is done in 2 stages. In that first stage, that is total receipt are first divided by project lifespan. Okay, first total receipt divided by project lifespan, we get average annual proceed, and this average annual proceed is again divided by initial investment. We get average annual proceed per rupee of outlay. Okay, so the calculations are done in two steps. In that first one, total receipt divided by project life, we get annual proceed, and this average annual proceed is again divided by initial investment. We get average annual proceed per rupee of outlay. Okay, then selection of project under this method. The project having highest magnitude of this estimate, that project will be selected for further implementation. This is the next method, that is average annual proceed per rupee of outlay. Okay, after this method, next one, that is drawbacks of undiscounted measures. Okay, so in case of undiscounted measures, it is just choosing among the alternatives. So for the same date or same date of project, we get different ranking. Hence, choice process become useless. Okay. So in case of undiscounted measures, suppose the project having same data and we get different ranking for same data. Hence, the choice procedure become useless, and ranking by these methods are inconsistent and incompatible. These are the two major drawback of undiscounted methods of project appraisal. Okay, so question may be asked on this topic. Enlist different methods of project appraisal and explain undiscounted measures of project appraisal. Okay, so this is all about today's lecture, that is undiscounted measures of project appraisal. Okay, thank you all.